As we move through this brand new year, we thank you for subscribing to our podcast. And if you have an idea or two about how we could make this information service more complete for you, we'd love to hear from you. We want to provide some genuine help for our listeners, answers and ideas to help you make the best possible investing decisions. And you can do that two ways. That is, communicate with us here. Use your phone or call anytime. Call our anytime line at 888-99-CHART. That's 888-992-4278. Or go to investtalk.com. That's InvestTalk with two T's, investtalk.com, and click on Contact Us. And thanks again for listening to Invest Talk. Welcome to our 1-hour meeting of the minds about money, your money. This is Invest Talk, made possible today and every day by KPP Financial. It's about managing risk while looking for profits, putting the money you worked for to work for you. And now, here's registered investment advisor Steve Peasley.
Welcome to Invest Talk, everybody. This is our Friday, March 6th edition of the program. And, of course, I always like to welcome the 860 listeners up in the San Francisco Bay Area, podcasters, and, of course, InvestTalk.com listeners. Today I have with me Helen Crawford from KPP Financial, who is helping me out. Helen, thanks for coming.
Hi, Steve. It's good to be here.
The reason we're here today, everybody, and it's the same reason that we say every day, is to help you make better decisions about your money. Instead of just wringing your hands and worrying about it, make some concrete decisions. Now, we're on your side. If that means you need to be in cash because you're just so worried, that means that you need to be in cash. You don't have to be in cash. There's ways to play the market on the downside just as well as on the upside. Now, we certainly can't control the financial markets. No one can. But you can control how you feel about it and control your money. You could do that. Now, you heard me talk about taking short positions or buying shorts or being short the market when we've had down cycles, especially recently. And you may know what that means, but be unclear about how it works or when you shouldn't even try it. It's an option open to experienced investors and inexperienced investors, but you need to know what you're doing. You need to understand what's happening. It's called selling short. Selling short. So, and there's many different ways to do it. And you can even be short the market in IRAs these days. You didn't have that option not that many years ago. You do now with ETFs, exchange traded funds. So we're going to have to explain those too. We will do so this hour. Now, it's always easy. It's not always. You can make money in an up market and you can make money in a down market. Okay, you can do it both ways. It's very difficult. It's more difficult, in my opinion, on a down market because the market does have, on a long-term basis, an upward bias. We just haven't seen that in 10 years, but on up, it usually has that bias to the upside. Things are pretty ugly right now, and so if you're going to do shorting, we've had a long, drawn bear market. Shorting, as the market goes down and down and down, shorting becomes more dangerous. So we're going to talk about that this afternoon. That's one thing we'll be talking about on our Saturday Morning Wealth Conference as well, later this month in Industry Hills. We're also going to talk about our conference coming up in Los Angeles area. We're going to talk about it. It's on the 21st of this month. The title is Thinking Outside the Stocks. Thinking Outside the Stocks. You don't always have to be buying stocks. There's other things you can do. Now, today's market is not the stock market of 10 years ago. If you have money in the stock market or money you'd like to put in the stock market, maybe come back after being gone for a while, you should probably join us on that Saturday Morning Wealth Conference. Give you some help. The conference will help you get up to date on what the market is doing now. So that's really what you need to learn. What is happening and why. So that's what we should do. It's the 21st, Industry Hills. It goes to Saturday morning, 9 to 12. We give you breakfast. We give you a bunch of handouts. And you can ask all the questions you want. And that's what it's there for. Now, are smaller companies that were beaten down by the economy going to be the emerging markets of tomorrow? Well, let's find out. Maybe they will, maybe they won't. If you want to sign up for this conference, go to investtalk.com and click on the conference tab near the top of the page. You'll see it. It's $45, but you're able to bring a guest in for free. Okay, so you can do that. Remember, that's this month, the 21st. The 21st in Industry Hills. Okay? Now we're ready for your calls this afternoon. If you're listening to our podcast today, you can call and you can ask your question, and we'll answer the question on the next program or by email if you prefer. The number is 888-99-CHART, 888-992-4278. Time to call. The market today started up on a positive note, then kind of fell most of the day until the last 20 minutes or so. And for the Dow, it did eke out a positive return, if I remember right. Didn't it end up positive for the day, Helen?
That's right, Steve, it did.
Okay.
It ended up a few ticks above.
Now, we've had a very bad week. We've had a very bad month.
It's been a long year.
Yeah, we've had a very bad February, a very bad first 2 months of the year, a very bad year last year. Does that mean we're going to have a very bad rest of this month and the rest of this the quarter, which is the end of the month, the rest of this year? Does that mean that's going to happen? Doesn't have to mean that, but it certainly means we are in a very strong bear market. At some point, it will turn around, but there doesn't seem to be any evidence of that yet. There's no evidence.
No, there's with the bad news on the employment today, Steve, that came out, it didn't hit the market reacted quite okay, really, didn't it?
Yeah, I think they I thought that they were setting themselves up for worse than the expected news. And the news came out as expected, bad. I mean, it was bad. But I think they set themselves up for it to be worse by selling off earlier in the week. And then when they got the news, it was like, well, I sold the news, and
right.
Here's the news, and it's bad, but we expected it. So, and remember, that's what the market is doing, everybody. It's selling down based on expectations. The expectation is for being a deep, long recession forever. If those expectations don't come true, and all of a sudden people start thinking that the recession is going to end 6-9 months down the road, the market will turn around sharply. And I think it's going to be very sharply, and you never know when that might happen. Recently, all we get is one-day wonders, one day up, and then it gives it all back the very next day.
That's right. It seems to me, Steve, that a lot of people are out there sitting on the sidelines, as we've been saying, and new investors too coming up. I think they're going to be a lot more conservative, getting it back into the market.
It seems like that to me. It seems like everybody's being very, very, very cautious. Very cautious. They've been burned so much, and they don't hear any great news from anybody. None of the political leaders, none of the companies out there, no one's saying that, well, we see some positive news. Now, I frankly see some hints of some possibility that we will get out of this recession maybe sooner than everybody thinks. What are the hints that I see? Well, the ISM report, this Institute of Supply Management, came out this week. It was down. It was 38% or so, something like that. I forgot the reading, but it was higher than last month, even though it's still below 50, which means that's the target you need for expanding market. Anything above 50, expanding.